Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, March 26. The stock market has been on a bull run recently, but it got tripped up Wednesday by a number of familiar concerns. In particular, the health of the financial sector was brought back into question by the analyst at Oppenheimer & Company, who slashed first quarter earnings estimates for Bank of America, Citigroup, JP Morgan Chase, and Wachovia to reflect expected mortgage and CDO-related write-downs. The estimate revision, combined with press reports that private equity deal for Clear Channel Communications was on the verge of collapse, and a warning from Deutsche Bank that it might not hit its 2008 profit target, set the tone for a weak start for the financial sector and the broader market. In turn, a weaker than expected durable orders report for February didn't do anything to improve the morning mood. Prior to the start of trading, the Census Bureau indicated durable orders fell 1.7% against the market's expectation for a 0.7% increase and a 4.7% decline in January. Excluding transportation, orders dropped 2.6%. Similarly, non-defense capital goods orders, excluding transportation, a measure seen as a proxy for business investment, also declined 2.6%. Shortly after the market opened, it was reported that February new home sales declined 1.8% from January to an annualized rate of 590,000 units. The latter was actually ahead of the consensus estimate, yet it failed to inspire much enthusiasm given the accompanying indication that inventory remained unchanged at 9.8 months' worth of supply. Selling pressure then picked up when Treasury Secretary Paulson all but suggested in a speech to the U.S. Chamber of Commerce that Wall Street investment firms should be subjected to increased regulation if they are going to borrow from the Fed. The related stocks faded to their worst levels of the session in the wake of that view, compounding the losses for the financial sector, which dropped 3.6% at its worst level of the day. The broader market tried to rebound in the afternoon trade after retesting its morning lows. Bear Stearns was initial standout in that effort after headlines crossed the wires that Senator Dodd said the JP Morgan Chase transaction raised serious questions and that he was going to hold a hearing on the market turmoil. The recovery try ultimately failed, though, as buyers lacked conviction in today's trade. One notable exception in that respect was seen in oil prices, which jumped $4.94 or 4.9% after a weekly inventory report from the Department of Energy showed a build in stockpiles that was much smaller than expected. Oil led a 2% jump in the CRB index, which also got a boost from a weakening dollar. Other headlines of note Wednesday included an announcement from Motorola that it plans to split into two independent publicly traded companies, word from Ford that it sold its Jaguar Land Rover operations to Tata Motors for approximately $2.3 billion, and news that AMR Corp canceled 300 flights to reinspect bundled wires on its MD-80 aircraft. I'm Pat O'Hare for Briefing.com. Thanks for listening, and have a good evening.